Well, folks, we have some major developments. We're going to speak about Alibaba at the top of the video, Chinese stocks, and major developments there. Then we're going to get into semiconductor trouble. We're going to talk about if that's recessionary in terms of what we're seeing or if that's very Apple specific with Texas Instruments earnings that just came out in the past hour. We're going to speak about Netflix earnings that just came out. We're going to talk about, is Netflix still a buy or is it not a buy after this big pop after hours? We'll also talk about the WWE Raw deal with Netflix. Tesla earning expectations for tomorrow, kind of where analysts are at versus me. I also have a hedge on against Tesla as well as my long shares. So we'll talk about if I'm going to make any moves there. I appreciate y'all joining me as always. Got a lot to go through in today's video. So yeah, appreciate you guys. Make sure you subscribe to the channel. If you haven't already subscribed, make sure you're subscribed here. And also tomorrow on Twitch, I will be doing my 3-hour, if not 4-hour Beast Tesla earnings live stream. So if you want to join me for that, that will be pinned comment down there. Put on your notifications and get ready to rock and roll if you want to join me for that tomorrow. Alrighty guys, so I looked at the stocks I hold, and in clear as day, the biggest winner chicken dinner here today was Alibaba. The next closest stock to that was Honest at a 3.9% move today, but yeah, Alibaba, massive move, nearly 8% up for this stock here today, $74 a share. So there's several components of why Alibaba stock popped huge today, okay, several components. First one of many is Alibaba stock surges after Jack Ma and Joseph Tsai, I can never pronounce his name right, by $200 million worth of company stock. Alibaba stock soared 7% on Tuesday after the New York Times reported that co-founder Jack Ma had been buying shares in the company. Ma and Alibaba chairman Joseph Tsai both have been buying shares, the report added, citing people familiar with the matter. Ma, who stepped down as Alibaba's executive chairman in 2019, but remains a major shareholder, purchased about $50 million worth of Hong Kong traded stock in the quarter, the report noted. Tsai bought around $151 million worth of Alibaba stock in the fourth quarter through his Blue Pool Management family investment vehicle. Alibaba itself bought about $9.5 billion worth of shares in 2023. Don't be surprised if they buy a ton more in 2024. Alibaba, once one of China's best contenders to become a trillion-dollar company, saw its shares obviously trade below IPO price last week. Don't be surprised if Alibaba is a trillion-dollar company again in the future, okay? It's just not today. So that's massive. As a new shareholder of Alibaba, somebody that just started buying the stock here, I'm very happy to see this. Very thrilled. I like it when folks that are very knowledgeable in the company, as knowledgeable as you can possibly get, which obviously Joseph and Jack Ma are, I like to see when they put in their money where their mouth is, right? And they're out there buying shares. So this is phenomenal. I think that's massive, okay? Second big thing that happened here is this. Chinese stocks surge on market rescue report plan. Chinese stocks rebounded as authorities reportedly mull rescue efforts for its long-ailing financial markets. Hong Kong Hang Seng surged, while Chinese stocks that trade in the U.S., such as Alibaba, JD.com, NIO, Xpeng, BYD, rose solidly to strongly. Chinese policymakers are looking to tap about $278 billion, mostly via Chinese state-owned enterprises, to buy shares onshore via the Hong Kong exchange, link Bloomberg reported, citing sources. They are also planning some 300 billion yuan in local funds to invest in onshore shares. That comes as the Premier Li urged forceful steps to buoy stock markets. Authorities also mulling other options, could announce at least some initiatives as soon as this week. So this is obviously the Chinese government realizing the stock market's in a lot of trouble in China. Their stocks are in a lot of trouble. And the problem is, when it comes to Chinese stocks doing so bad, right, it gives a perception that China is doing very bad. It gives a perception that the government there is doing very bad. This is like what it always ends up coming back to. Like if the stock market goes down, let's say the U.S. stock market, let's just say the U.S. stock market. If the U.S. stock market goes down 50% next year, who are they going to blame? Are they going to blame the Federal Reserve? Are they going to blame companies? No. You know who they're going to blame? The President of the United States. Even though the President of the United States has very little to do with whether the stock market goes up a bunch or down a bunch, that's who takes the blame. And so if Chinese stocks are all doing bad, if the Chinese stock markets are all doing bad, who does it come back to? Xi Jinping. You're the problem. You're the reason the stock market is low. And so suddenly the government has to take steps and realize, oh my gosh, we're losing credibility. Everybody's looking at us. We're bad in this situation. And they feel like they have to do something, okay? This is the way the game is run. And so now the Chinese government is starting to realize, crap, man, like this has been going on. I mean, Chinese stocks have basically been going down for 3 years. And at some point in time, you got to put your foot down and say, enough is enough. And I believe I was reading last night that the Japan stock market just passed the Chinese stock market in terms of market cap, which is something that shouldn't even be possible, just to be quite frank, when you look at how small Japan's population is versus China. That is no way that should happen. And how powerful the Chinese companies are compared to the Japanese company. That should never happen, but it's happened. So they realized they got to do some things here. Obviously, that's something that's at least short-term good for Chinese equities, right? Then this happened. I thought this was bigger than the potential of them flooding money into the market. I thought this was much bigger. NetEase 10-cent jump after China regulator removes gaming rules draft from website. This all came out in the past 24 hours. Crazy, right? NetEase and Tencent were among the stocks that surged on Tuesday after China's gaming regulator removed proposed draft rules for the online gaming industry from its website. The link that proposed draft rules on the website of the National Press Publication Administration was not accessible on Tuesday. Now, why is this massive? The reason this is massive, it's not just about, oh, this helps NetEase and this helps Tencent, and so maybe if those stocks are in indexes, it pushes up other stocks. No. The reason this is so huge is this is one of the first signs, one of the very first signs, extremely important, that the Chinese government is starting to take a step back and they realize, oh my gosh, we're way over-regulating, we're way hurting our companies, the perception of our companies, the investment opportunity in our companies. We've got to take a step back here because we're doing way too much damage, way too much collateral damage to these companies. This is a very positive signal, extremely positive signal. This is China saying, we've gone too strict here, we need to let off because this is too much, too far, and it's clear as day. It's crazy it took them this long to start to realize this, right? But at least they're finally realizing it. And so now this is a stepping stone to actually making China investable again, a huge stepping stone in the right direction. Now, on top of that, Xi Jinping, right? I told you guys when he came to the United States a couple months ago, that was the first big sign that I said China's serious about recovering their stocks, their stock market, their financial markets, and their economy. That was the first major step in my opinion. Well, the first major step was actually them finally opening back up their economy in 2023, toward the beginning of 2023. The second big step was obviously Xi Jinping coming to the United States a couple months ago. So Xi Jinping now and the Chinese government in general, they're realizing they have to play nice or they're going to have no fun in this situation. They got to be friends, not bullies, to their companies, because if they do that, they're just going to hurt themselves. They're not going to make themselves investable. And if they make themselves not investable, they're going to be in a world of hurt. Let's just put it that way, a world of hurt. So they realize they've made a lot of mistakes over the past, I would say, 4 years, and they're starting to clean up their mess. It's going to take a while. It's going to take several years to really clean up their mess, but they will clean up their mess because they have no other choice than to clean up their mess. There is no other choice. There is no other option. It's either clean up your mess or you're not going to be an investable country, and at the end of the day, you're just going to wilter away. And that's not acceptable for Xi Jinping or the government in general. So, yep, things are moving in the right direction. Now, do I like what's going on here? And the answer is yes and no. The problem is Alibaba is a relatively new position for me, right? And I got $16,000 roughly in the stock, 222 shares. I wanted to build this up to about a $50,000 position or so, and before the stock started to move huge. So I'm hoping Baba calms down a little bit here. Maybe just everybody's excited, and maybe the enthusiasm fades a little bit. I'm hoping that kind of happens because Alibaba was kind of a position I was thinking about adding aggressively for the next 3 to 6 months. So we'll see what happens here. As of right now, I'm still a buyer of Baba, but if the stock was all of a sudden up 30, 40, 50%, maybe I pull back at that point in time in terms of the amount of shares I'm adding. But for at least right now, in the very short term, it still is a buy, no doubt, okay? So good news, things are moving in the right direction in regards to that, okay? Next up here. Semiconductor trouble, recession, or is it more Apple specific? And then we'll speak about Netflix, what's going on there, if that stock's a buy or not, and then we'll talk about my expectations for Tesla, what I'm up to there, okay? So, Bad news, bad news, bad news. Texas Instruments down, obviously after hours, stock down about 4%, but that's not the worst part. This is the worst part of that, okay? Texas Instruments gives weak forecast as chip slump persists. Ooh boy, so we're not out of the woods yet when it comes to electronics demand, semiconductor demand. Weakness in automotive and industrial chips drag down results. Company-wide product range makes a bellwether for industry. So right off the bat, I mean, it sounds a little more recessionary than just Apple specific, if you're talking about industrial chips and automotive chips in general, right? Now, here's the deal, okay? The revenue guide was, I don't want to say pathetic, but it was really, really bad, okay? Here's the deal. They were expected this upcoming quarter to do $4.05 billion of revenue. Now, they would be down 7.4% year over year, which keep in mind at this time last year, necessarily their results weren't even great. So it's just another level of weakness. But here's the problem. Their revenue guide was at a midpoint, from what I saw, it looked like a midpoint of about $3.6 billion. So they're talking about missing where analysts were at by about $400 million or so at the midpoint, which means you're talking about a substantial double-digit decline in revenues year over year. That's not good. That's bad, okay? Extremely troubling numbers there. Now, in terms of their latest results here, which keep in mind, it sounds like it's going to get even worse for Texas Instruments moving forward than it's been right now, but this was a D- quarter they had here. The only reason I gave them a D- and not an F is because they're still obviously very, very profitable. But this was horrible. Revenue was down substantially year over year, down about $600 million. Cost of revenue went up for the company. Cost of revenue up while your revenue is down about $600 million? You got to be flipping my flapjacks, folks. Gross profit was down substantially for the company year over year. Research and development, SG&A, they kept that roughly in line, okay. Operating profit down to $1.5 billion from $2.1 billion. Income before income taxes, $1.5 billion versus $2.1. Net income, $1.3 billion versus almost $2 billion at the same time last year. Diluted EPS, $1.49 versus $2.13 in the same quarter last year, right? Not good, not good, not good, and not good. Horrible results there. Now, what stocks is this likely to let's call it, weigh on tomorrow and potentially pull down the stock prices of? It could pull down the entire semiconductor industry, but I'm not as worried for companies like NVIDIA, AMD, because those ones have very specific stories going around them. But there are a lot of other stocks that could bring down tomorrow. Could bring down Broadcom, could bring down TSMC, right? Taiwan Semiconductor. When you have a giant like Texas Instruments saying demand's going to persist in terms of weakness there, that's not going to be good for TSMC, right? So I wouldn't be surprised if TSMC's down tomorrow. Qualcomm could be down tomorrow, although they're much heavier, a little more heavier on the mobile space, so maybe they're not hit as much. Obviously, TI is going to be hit. MU could be hit on the back of these results as well. Micron, massive memory chip company out there. Marvell Technologies, NXP could be hit. On Semiconductor could be hit. Skyworks Solutions could be hit. Qorvo could be hit. Many of those stocks could be hit tomorrow, just based upon this commentary out of TI there, okay? So do I look at the semiconductor stocks as investable right now? In my personal opinion, for the majority of them, not super investable, because unlike other spaces that I could see, like sentiment being at all-time lows and, recovery, the semiconductor space, I don't know if I just see it right now. There's no electronics necessarily right now that's like, wow, this is a massive growth vector for the entire semiconductor industry. There's nothing like that out there. The smartphone's kind of gone into the dark ages at this point in time in terms of innovation slowing substantially. That could weigh on margins of these companies, because if you can't innovate and if companies like Apple can't keep raising their price on consumers, then you're stuck in a situation where, let's just call it the improvements are extremely modest. So that's not good there. And then in terms of automotive, I don't know if automotive's coming back right now. Interest rates are still insanely high versus anything they've really been at in the past 15 years. And so I'm not confident automotive's going to come roaring back, or big ticket purchases. Industrial equipment, things like that, I'm not super confident in that either. So the semiconductor space could be in a weaker state for years. It's potential. I wouldn't bank on it, but it could be weak for years, folks. And so that's just a little food for thought there, okay? So anyways, obviously AMD and NVIDIA are very specific companies that have very specific things going on for them. So there's a lot of divergence there, okay? Next up here, Netflix. Let's talk about if Netflix is still by their earnings. the WWE situation, and we'll obviously talk about Tesla and my expectations versus where analysts are at and what I'm up to with that. Okay, so obviously the vibe around Netflix here after hours is very positive, very positive. A lot of people are very excited about the results, the subscriber numbers. Netflix always has moved huge on one number, and that number is subscribers. The subscriber numbers are great. Everybody's excited about Netflix, and everybody's very excited about these subscriber numbers, and so the stock's moving up huge. Should be a very nice day for Netflix shareholders tomorrow. Okay, now they announced here, this actually came out way before the earnings, but Netflix is going to become the home of WWE Raw beginning in 2025. So this is huge development here for Netflix because they want to be at least in sports entertainment. I don't know if they really want to be in sports in terms of like covering, an NFL game and NBA games and MLB and things like that. They don't really seem interested in that. But WWE is, a sport, not a sport, right? It's more of entertainment. It's drama. That's right up Netflix's alley. And so I saw this deal, and right away I was like, that makes sense for Netflix. Like, it's a drama show, at least from the wrestling I remember, it was a lot of talking, and it was about the drama more than the actual wrestling, right? And so this is right up Netflix's alley. And so I think they're going to have this deal for about 10 years. It's probably a win. It's a win for WWE, certainly, in my opinion. And I think it's a win for Netflix as well. It makes a lot of sense that they're going to go ahead and do that. Now, in terms of their earnings report, folks, check this out. Are you kidding me? This is an A-plus earnings, okay? This is about as good as it's going to get. Revenues went to $8.8 billion versus $7.8 in the same quarter last year, so revenues up about $1 billion. Cost of revenues, $5.3 billion versus $5.4, so cost of revenues was down for the company year over year. That's incredible. Marketing was up for the company year over year, but I gave that a blue because, spend more, attract more, right? Technology and development, they kept that in line. So that's why I gave that a green. I'm like, that's amazing. They kept technology and development roughly in line with a year ago. Phenomenal. General administrative, that was up year over year, but it's up a very small amount of money, right? $50 million roughly versus revenues being up about $1 billion. Good job. Operating income went up to almost $1.5 billion versus $549 million. You kidding me? Operating income up nearly $1 billion year over year. That's insane. Income before income taxes, $1.1 billion versus $39 million in the same quarter last year. Net income, $937 million versus $55 million in the same quarter last year. Diluted EPS, $2.11 versus 12 cents in the same quarter last year. So that's an A-plus earnings for Netflix. Well done. That's all you can do is just give them claps, man. Well, flipping flapjack and done. Now, going into these earnings, I said Netflix was a buy. If you watch this video here, talking about this, I said stock's a buy going into those earnings, right? Now, the question is it still a buy? The stock could be up tomorrow anywhere between 7 and 14% probably, my guess is. So, unless they say something crazy on the conference call that shakes things up negative or something like that, but is it still a buy? And the answer to that is yes, Netflix stock is still a buy. Here's the deal. Analysts could be too low in their EPS projections for next year. They're at $15.94, right? Even based upon that, the company's trading at about a 30 forward PE roughly, based upon 2024 numbers, which is too low for the growth rates Netflix is putting up in subscribers in terms of revenue. And I wouldn't be surprised if the WWE deal brings a lot more subscribers. So I think Netflix is, still a buy. Even if that stock's up 15% tomorrow, it's still a buy. So I don't own any shares, but man, I wouldn't mind owning some shares of Netflix. It's just a beast. And that earnings report is all the proof you ever need. Not many companies are putting in A-plus type earnings reports. Netflix is one of those. That's absolutely incredible. And by the way, this is big for the stock market. Why is this big for the stock market? This is huge for the stock market, folks. Netflix is a massive vibe stock, I call it, okay? So when people are feeling good about Netflix, they feel much better about taking risk in the market. They feel much better about the market in general. They feel much better about big tech. And so this was a positive development that the first big tech company we really get for this earnings season, Netflix, the first giant, right, multi-$100 billion market cap, the fact that they came in with an A-plus earnings report, the great subscribers numbers they had, this is great news. I thought it was phenomenal. Now, keep in mind, cold water could be thrown in this whole situation tomorrow, and we're about to get into that, okay? So Tesla. So Tesla's struggling going into these earnings. There's not obviously very much excitement going into these earnings, which is somewhat of a positive thing because, I've seen it before where there's a lot of excitement goes into a Tesla earnings and then the stock falters. And so it is nice for one set going into a Tesla earnings. Seems like there's no excitement, which means the downside could be somewhat limited. And if Tesla comes in and surprises, the upside could be massive in regards to that, right? But the stock's trying to cling to above $200 going into these earnings. There's just a lot of people are worried, right? Now, I have not only my shares I own in the public account, which is 1,700 shares, right? But I also have my hedge in the public account as well, which I own 2 option contracts. These are put options, so these are basically a hedge against Tesla. Those are doing pretty well right now as well. So it's nice to be doing well in the stock and well in the options, right? Am I thinking about pulling these options and selling these off tomorrow because I'm afraid the stock's going to pop big? And the answer is no. I'm going to keep these on for now. If the stock tanks big, I might cash at that point in time. Let's say it went down big on the earnings or something like that. I might pull at that point in time. Let's say it went down to 190 or 185. I might decide at that point in time to go ahead and cash out. Maybe I go long some more Tesla shares at that point in time, or maybe I re-hedge with a different stock or something like that. But I don't want to bank that Tesla's going back down to under 150. Could it go under 200? For sure. But I don't want to bank that it's going to go under 150 necessarily. So if it's anywhere in between 150 and 200, I might pull a ripcord on that if that situation played out. But I want to keep this on as protection going into this earnings because obviously I'm going in with a lot of shares here, right? And I need some protection for my accounts in general. Now, with that being said, I'm worried about the EPS numbers specifically. Revenue should be roughly in line, but I'm very concerned about these EPS projections here. So they're expected to do 74 cents this quarter. I'm not super confident in that. I don't know. We'll see. I'm not confident at all in EPS numbers from Tesla right now with how much they've lowered price and the fact that they're trying to ramp Cybertruck right now because that's going to be weighing on their profitability in a major way. So in next quarter, I'm not confident in that EPS projection either. 81 cents, I'm not confident at all. So I'd be shocked. If they come in and destroy EPS, I'd be shocked by that. I'm not confident at all in their EPS numbers right now. Now, in terms of the conference call, this is all that matters, just to be quite frank. And to be honest, when it comes to stock for the next day, you can look at the EPS numbers, you can look at the revenue numbers, you can look at deliveries, production, all that stuff. It's all irrelevant for the short term. The short term cares about one thing, and its name is margins. And so if there's a situation where Elon Musk comes out and the team comes out and says, hey, you know what, margins are troughing in the next 1 to 2 quarters, we're going up from there. I mean, we're flying. The stock's going to head back up to 250. But if there's no concrete, because I can tell you analysts are going to ask it 10 different ways. If they can't get a clear answer out of margins and where they're troughing and what things are looking like in the back half of the year in terms of if margins are going back up, believe me, analysts are going to ask it 10 different ways. It's going to be it's the number one question on everybody's mind is margins on Wall Street. Everybody. That's all they care about. The revenue numbers, EPS numbers, projections, blah, blah, blah. Doesn't matter. Margins. Okay? Until people are confident margins we're around trough time for margins, they're not going to feel comfortable owning these shares. So if he comes out and says margins are going to head back up back half the year, we're off to the races. If there's still nothing and analysts ask them 10 different ways and they won't commit to anything as far as margins troughing anytime soon, we're going down. We're going under 200. It's all coming down to that. It's all coming down to that, folks. So just understand whatever you see when they're talking about Tesla tomorrow. Oh, revenue came in at this, EPS came in at this. It's all irrelevant. It's all about margins. It's all Wall Street cares about right now. Keep that in mind. Now, if the numbers are bad out of Tesla, there is a real risk that it could pull down Meta. Obviously, it could pull down itself too, Tesla, right? It could pull down Amazon. These are many of the biggest positions I have in the public account. It could even bleed into a stock like Palantir. And the reason being is Tesla is such a big risk on play that if Tesla's doing bad, then a lot of people don't want to own the other big techs. They don't want to own the Metas. They don't want to own the Amazons. You don't even want to own a stock like a Palantir, which is a little more of a risk on play, right? And so that's the risk. Now, on the flip side, if Musk says margins are coming back in the back half of the year and we're off to the races, don't be surprised if Meta breaks 400. Don't be surprised if Amazon heads to 160, 165, and don't be surprised if Palantir starts heading back up toward 20 in that sort of situation, because then that would be Great news from Netflix. And you could have a Tesla kind of add-on cycle there of like positivity if they could say trough margins are coming here. But that conference call is going to be everything, folks. And I will be listening to that conference call live on Twitch tomorrow. Make sure you join me for that one if you want to. That's pin comment down there. I'll be reacting live to their earnings coming out, as well as the other earnings coming out tomorrow and the conference call live on there. That's going to be a crazy live stream there. So pin comment if you want to join me for that one tomorrow. Much love as always, folks. Appreciate you joining me. Thanks for smashing a thumbs up. Thank you for being subscribed to the channel, and have a great day.